Hello, everybody. Kirk Spano and Scott Shooter Henderson on Saturday, February 17th, 2024. Major markets review. How are you doing, Shooter?
I'm doing pretty doggone good, except for I didn't make any money on the Super Bowl. Did you?
No, I took a big swing with a whopping $20 that I was getting about 100 to 1 on, and Kansas City let me down. I needed them to, at some point in the game, they had to be up by 14 points and win the game, and I needed the under, which was 47 or lower, which we got.
Yeah.
And Kansas City won, but at no point were they up by 14. So, 2 out of 3 ain't bad, but it don't make you money.
Hey,
Well, except in our case.
let's jump into this today.
All right.
Now, I am going to do something just a tad bit different. Okay, let me just jump right here. You see my screen?
I sure do. Bitcoin halving chart.
Yep. Okay, so obviously I'm starting off with crypto. And I'm sorry I'm not recalling your name. Somebody had asked me about the Bitcoin halving in chat. And I thought it was a good time to address it, just really to bring some comfort to us. So first off, when we go back and look at the history, and let me bring this chart in so I can actually bring my marker up. So, we've had this peak. November of 12 was our halving, right? So we had a peak before it. So there was an extended period of time here. Now, if we go back and look at the peak occurred in 2016, it was like March, I think, of 14, and then the halving occurred in 2016. And then the peak occurred, about March to June 2018, and then the halving occurred 20. Now, let me flip back to my Bitcoin chart. I want to just go out and look at a 3-month here, and this is a little challenging because it doesn't show well, but, we have just hit a new peak, looking at the larger picture. So the halvings, typically it's been about a 6 to a 40% decline. But I don't know that that's going to be the case here with Bitcoin ETFs, because basically we have to have panic set in. It really depends on how much of the volume has become Bitcoin ETFs versus spot. And I haven't seen those numbers yet, so I don't know. So if anybody sees those numbers and you get it at a decent source for me, send it to me. But, looking at Bitcoin, I want to just drill down to where we are and what I see. I'm just stepping down. We're looking at a weekly time frame. Right now I'm seeing an intermediate wave around 54, 53, 985. Now, right or wrong, sometimes I'm shallow. And one thing the count tends to tell us is when we are overshooting our count, obviously euphoria exists. There's more buyers than sellers. When we're undershooting a count, obviously euphoria doesn't exist and there's more sellers than buyers at some point. And, so the sellers are winning. So in this scenario, we overshot in our last run, but we really haven't. We've overshot twice on the larger time frames, but if you go down and look at the daily and the 4-hour, we really haven't. But my point here on Bitcoin, let me jump in and just bring in my retrace. So the assumption is, I think, and I'm just thinking aloud, is that we put in this 54, and whether or not we are euphoric and continue a little higher in this overshoots, which could, I think that occurs, roughly by the end of March. Looking at early April 24 is just before our primary wave 3. Now, so what's the risk? Do we really want to be holding into a halving event? And my first response is probably not. About the only thing that we could do if we were going to hold would be to hedge in some way. And there are really not a lot of choices for that because obviously we don't have options in the new Bitcoin ETFs. So our option really is, and I'm just going to jump around for a second, is Coinbase. All right. However, it has a very similar looking chart. It's in a larger primary wave pattern where it's looking to put in our B around 277. So it's got some decent upside, but then again, it still looks like it's going to roll over. Now I want to jump out to the monthly chart on Marathon. And this last cycle in Bitcoin, I didn't use Marathon as an instrument because it was not acting well, and it's just started to act well again. But the larger picture of Marathon is that it has a lot of upside. So the halving, I think, is going to have a very dramatic effect on the miners. So I'm going to just do a lateral shift over here to miners, and I want to look at Bitfarms. And the main reason I like Bitfarms is because of the larger upside to versus where we are. My primary wave trigger came in at 34 cents. I don't know how many of you added down there. I don't know how many of you added at $1. I don't know how many of you added at $2. I don't know how many of you added at $3. But our intermediate wave is going to be about $7. So we still got about 120% gain here in the miners. The question is, so let's jump down to the daily and say, well, what kind of risk do we really have? So I'm just guessing here, and this is a little hyperbole in my thought with where we might be. So let's say by April, we get up to this $4.16. So theoretically, or, with my take on Elliott Wave, of course, I'm always looking for 50% back just because it increases my margin of safety. Very much, different way slant on what Kirk does, but same concept. So maybe $2.53. Now, Bitfarms has options, Coin has options, and Marathon has options. So if a person wanted to hold because they're a position trader, they potentially could come in and just buy before the halving, some 250 puts, give it about 60 days out. That would insulate you for maybe 3, 5, 9% of whatever your position size is. And then you could use, let's say you're going to hold GBTC or you're going to hold IBIT, right? Then you could come in and, maybe buy some coin puts about 2 weeks, 3 weeks before the halving, or marathon puts 2 or 3 weeks before the halving. That's sort of my thought on the hedge. I think I'm more inclined to cut or trim, with that thought, just because historically we have. But again, it's an unknown for me. I don't know how much the Bitcoin ETFs are going to affect the numbers. Any thoughts, Kirk?
Oh, lots of them. So number one, what is my number one thought on shorting stuff, folks? It's don't short good companies and don't short good assets. Just don't ever do it. There are plenty of shit stocks and, in fact, shit crypto coins that you can bet against if you want to. To bet against the thoroughbred on the idea that it might need to stop for water is insane to me. You are taking on massive amounts of risk to short Bitcoin or any of the companies that you really love, like Apple or Microsoft or whatever. Now, if you want to trim your holdings a little bit because you're having a local peak, fine, go ahead. However, I'm thinking in terms of years, not quarters or months. So I don't do that very often. Here's my thoughts specific to Bitcoin. I will actually, I'm gonna take away the screen sharing for just a second. Bitcoin and the halving. There's a very strong chance that the price of Bitcoin doubles. And if you take a look at the other cycles, we probably already had our correction, right? Because we had the halving back here, wherever it was, all-time highs.
20.
Then you get your correction. And now we're having a halving. They think early April is what it looks like. And why would the price of Bitcoin go up when the miners get half as much money, basically, because they're going to get half as much reward? Why? Because they want to keep making as much money. So they need to raise rates, right? And so everything goes up because there's a scarcity issue and a profit motivation by the miners. And I think that Bitcoin pretty easily on every chart that I've played with goes to 85,000 this year, if not significantly higher. So this halving, could we see a few weeks, basically just because general liquidity conditions get a little bit tighter, which we talked about in the macro dashes? Yeah,
go push back to your May 11, 2020 halving line that you have over there. It's not on the bottom of your chart that you're looking at.
Yeah.
Just point over there. See where that circle is? That's the halving. All right. Now notice that flat there?
Yeah.
So,
and that's my point is.
And we're above that. So, this is not the same. I mean, it might be the same, but
it's same enough. It's same enough that it's a small, difficult to make trade. I wouldn't screw around.
50% back. This leg over here on April of 2019, the halving coming up. Notice that last little hump you see, and we need a 50% back test going into the halving. Really would be perfect, because then we could put positions or add positions there. But we haven't really back tested. We're breaking out here. If you look at the other halvings, the only one we did July of 2016, note where the halving is. notice that push, that circle all the way over to the left of your chart. Notice how we pushed and then we got the back test afterward. Okay. The halving occurred after your second circle. You had a push and you had a rejection before. We're not seeing that. So it's more likely that we're going to see the July 2016 halving, where I think we push up maybe towards the top of that third circle box, and then we get a flush. And I would think that, the golden rule, my golden box rule, 50% back, is viable. That's my thought. So I guess it really depends to me on how large your position is based on your overall positions in Bitcoin. That would be how I would look.
So I think it depends on how you look at your investment portfolio. If you're trying to accumulate Bitcoin, don't screw around with selling it and then trying to buy it back. It's a difficult trade. It's not a big move in magnitude. The big move in magnitude is if it goes up to 300,000, like I've been talking about. And in fact, in this chart, he even has a target of close to 300,000. The way to look at this is if there is a pullback in Bitcoin in the next month or two, if there's a pullback, you shouldn't be looking at it as, oh, can I play the pullback to sell now and then buy back later? No, piss off. It's too hard of a trade. Unless you are a very regular swing trader and you have, a large position that you can trim from, it's not a trade. So the move here is if you don't have enough Bitcoin, you buy the heck out of that dip, because coming out of the halving, every incentive out there, and now with ETFs on top and with more emerging markets coming, is bullish. So any pullback is a buyable event, but every local top is not a shortable or sellable event. It's just do nothing for now.
Yeah.
So what we're saying, and what I'm saying, is that if we get a dip like he's talking about, which is very plausible in the next month or two, especially as market liquidity gets a little tighter temporarily, buy. That's what I would be saying.
Buy the dip. Yeah.
Yeah. And then hold on. Here's the other thing, is that the reason I like Marathon is because they have a huge Bitcoin position. And the way that you figure out who to invest in on a company to company basis is, if you're in Bitcoin, you're looking for the companies that have the most Bitcoin divided by their market cap. So I haven't done this with Bitfarms, which is right here. Bitfarms owns 804 Bitcoin. So $41 million and BITF, right? So $41 million in Bitcoin divided by 1.6 billion. Mara is market cap 6 billion. So go ahead and do that math, somebody. I'm not going to do it. By 800 million. So 20 times more Bitcoin is their market cap 20 times higher. Let's see.
Where you roll just a little bit is in your cost to produce.
Right. But Marathon's among the cheapest. It's a pretty negligible difference. But
actually, it's pretty decent. Marathon's about 16K and Bitfarms is 8,400. Now, I'm not sure how the South America.
Even if you apply a 2 multiplier there, Marathon is not 20 times the value of Bitfarms, which is what the Bitcoin holdings imply. So even if you say that Bitfarms has double the margin, right? Bitcoin, it should still be 10 times more, and it's not, because this is $1 billion company, and Marathon is a $6 billion company, but it has 20 times more Bitcoin. So Marathon is demonstrably by 50% to 100% cheaper than Bitfarms on a fundamental basis. So that's how you do that. You divide the value of their Bitcoin holdings, their market cap.
Yeah.
And that's why a company like, and I'm not even talking about Iris anymore. So the problem with Iris over in Australia is they sell their Bitcoin as they get them. They don't keep any of them.
Yeah.
So Marathon has done a great job of accumulating a huge pile of Bitcoin.
But I don't know what their debt load is in comparison to,
Yeah.
But here, okay, one thing that's in the picture. First, let me go back to my first statement.
Hold on, let me you go ahead and take it back. There you go.
Okay, cool. All right, so one thing that you have, I'm a scalper. I'm a swing trader. So my time frames are much more shallower than you as a trader. And it's not that the camps argue. A position trade is completely different from what I do. And, that was one of my initial challenges when we first started working together, was really grasping that and connecting those two worlds together, because they really are different.
Right, because you're looking at it from a standpoint of this is a local top, I should sell it. I'm looking at it from the standpoint of I don't care about the local tops. I want to own it long term. Tell me when I can buy the dip.
Yeah, me, it's, hey, I can buy it for $500 and sell it for $1,500. That's really the short time frame that my mindset is. So, but in that sense, you're right from a position trader standpoint. And that, that's where, I want to make sure everybody understands the differences, is that I'm in the trader camp and Kirk is in the position long-term investor.
I want to be taller again.
Mm-hmm.
I want to be taller again. I just changed the camera.
Hey, I can do that. No, but all right, let me just go back into it. Now, the one thing with Bitcoin is the halving event, is basically taking, I think it's 6.2 terahash to 3.125 terahash to hash, certain number of Bitcoins a year, whatever that actual number comes out to. So they're seeing about a difference of about 50% in what their miners produce. So now there are different tiers of miners. And this is one thing that I learned when I bought my first miner. And, it worked great until it didn't work. And then, because basically what ultimately happens is the older miners become worthless because it costs more electricity to produce that Bitcoin than the newer miners. So the advantage that, for example, Marathon has is they've just recently installed a whole crap load of new miners. They're actually a little ahead of Bitfarms. Bitfarms' big jump won't hit until probably the third quarter of 2024. So it'll be well after that. But that expense is a huge factor, because realize those older machines are less profitable now than the newer machines are. So it really depends on, and I don't know what that mix is with Marathon or anyone else actually, but it depends on what that mix is with Marathon as far as how well they ride out the storms versus other miners. And that's really, my thought. So I think miners, like, I don't think I would trim Bitcoin itself. Okay. I might hedge. And if I was long coin, I might hedge. But as far as the miners, I think I would trim going into the half, because we really don't know what that outcome is going to be. Does that make sense?
Sure.
Okay. So let's move on. Let's take a look at where Mr. Market is. All right, dollar. I think there's a chance we break out here. I think we blow out this 105. Keep going. This is just, it looks different to me. Than this chop grind to the downside. That clearly has a bearish look. We probably should have continued to the downside. It looks to me like this ended. RSI structure. Support band right there where it tested the base of it, tested it, held, came up, back tested it with a higher low. There's a chance we break out, which sort of changes the dynamics. That is a catalyst for my March thesis on a breakdown. But first, let me jump here. I want to look at XLU.
Go back to the dollar.
Okay.
What's it called? What's your chart pattern called if the dollar fakes a breakout just enough to get everybody to sell stuff, and then it says, just kidding, I'm going back the other way? What's that called?
Good question. It's not resonating for me. But I would say that it's probably something like this.
There you go.
A triangle formation. Doesn't really look like a diamond, but it's the look that I see here, and let me just come in and do more of a scan to the upside. It puts us up around 108. Now, my point in equality up there at 108 is that is going to be a hell of a headwind, heck of a headwind for indices. Once we get above that 106, 107, it's going to be like a ton of bricks. So let me jump to XLU now. Now, note that we really don't have an extreme flight to quality, but we're not flushing either. Now, I want to jump out and look at the larger picture here in XLU. We have a huge ABC pattern that has a potential here. Now, that's bullish to me. So I like to look at short term, long term, and then what the visual gives me. Then I want to jump into the indices, and I'm looking here. Okay, so
let me jump in. So just so people are aware of this, if the utilities start to lead, that is almost always a harbinger of a market correction 6 to 12 months out.
Should have said it that way. All right. So with the S&P, I still see, we're building out this top here, this little flat, may get up to the 515 and it may just build, it may not. That's one thing about flats. But this is very euphoric in comparison to our other legs moving up. Very euphoric. So one of my thoughts is that we just flat out continue here. And with that, I'm going to switch to a longer term chart because I want to look at stocks, semis, tech, and this AI revolution has been leading us, SCMI, SMIC or SCMI, whatever that label is, and Nvidia are even better stories. But what I've got is this gold band down here. I want to go back and show the parabolic curve out here on a 3-month chart and just give you an idea of what this sees. All right, so this sees, and this has just been my way of measuring a parabolic move over time. And, it works well, just as in a simple way. And basically what ultimately happens is you have a flat on the bottom and you have to find a flat on the top where all of your low points tag that line. All of them tag that line. So that puts the SOX. Now, I can't tell you how long it's going to take for us to get up there, but that puts SOXX, Semiconductor ETF, at $1,600. Now, I want to go back to the SPY, and then I want to jump out to the monthly chart. And I just want to give the visual of what the current count is. Now, right here, this is reflective of a leading diagonal. So it's going to end here. So now I want to jump out to the 3-month chart and do something just a little bit different. And I want to look at this leg here. And this is the insanity of what I do. I mean, I don't know if it's insanity, but it's how I see things. So this really is our low of this leg.
Can you stretch that out a little bit?
Yeah, I wanted to get the count first.
Okay.
So now, and this is when I look at different time frames and different charts, I see things a little differently. Hey, and if anybody shoots out any questions, Kirk, and you see it in chat, just shout it out to me, or please do that. So, this, maybe it's not a leading diagonal. Maybe it is an impulse leg, and we are going to see this boom of a rally. Now, I think, and that is a whole different topic. But see, one thing that I do when I'm looking at different time frames, I want to see the bigger picture, AKA my life expectancy. Okay, hopefully it's 85. What it's going to look like, 10 years out, what it's going to look like 5 years out, and what the next year to 3 years looks like. It's sort of how I look at things when I'm looking at a chart. But on that thought, I wanted to throw that in because, I'm seeing signs of euphoria. And now I'm just going to jump off and go to my sectors real quick. XLK is not slowed down. XLF is joining the party. Emerging markets look like it's going to join the party. Okay. And let me find my last one. I should have had it up there, but XLV is leading the party. All right. Now that is one heck of a euphoric push. Now with that, I'm going to jump back. Any questions before I jump?
I want you to put into the chat that SPY chart that you just had a second ago with the very long-term impulse wave.
I'll make a copy of that and post it.
And strip out a bunch of the short-term stuff because I just don't care.
Okay, I'll do it. All right, beautiful. All right. So now let's jump back to the NASDAQ. All right. Now, again, we're looking like we're in this flat. But again, this is not quite as euphoric as this last leg. But if I look at the trajectory of this slope, it's pretty much the same slope. We go back and look at our prior leg, same slope. I need to have all my labels locked, but I don't. All right, so, but this
locking your labels, man. It always comes down to locking your labels, doesn't it?
With it, as much crap as I got on chart, bro, it makes me, especially when you're trying to jump around. Let me tell you.
Yeah. So, dude, it's early. I'm on my second coffee.
It's all right, bro. And not only that, I'm tired. I don't know why I haven't been sleeping well. It's like the dog's been waking me up at 2 a.m. and he wants to go out. I have no idea what's going on with him.
Oh,
he's in the laundry room because he wouldn't shut up this morning.
You need more midnight walks.
Oh, he's hearing something. We had another cold front come in. We hit about 36 last night. So, you can hear all the way to the express.
That's 30 more degrees than we hit last night.
Oh, really?
Yeah, we were in the single digits.
Okay. Yeah, better than you than not.
This is why you'll all be able to visit me in the Caribbean next winter.
Yeah. Okay. So now looking at the NASDAQ, I also want to jump out and take a look at the larger picture here as well. because when we look at the larger picture in the NASDAQ, and I realize the Magnificent Seven and the FANGs prior to that were really our leaders. And, I want to sort of do the same thing that I did, and I'm just going to come off of here and I'm going to do a scan. So now, has anyone started to recognize the MO here? And so I think there's a potential that we might not top here, which makes it very challenging going into the Fed environment that we're in. I think, and please correct me if you think I'm wrong, Kirk, but it implies to me when I'm looking at these charts that the Fed's going to panic. So what would panic the Fed to come in and just flood the markets with money?
A bigger bank than they thought was going to have trouble.
Okay.
Right? Some $1 trillion bank having a problem.
So let's say, for example, if Chase, Bank of America, or Wells Fargo.
Or Citigroup, because they're the ones that usually screw up.
Yeah. Who has the largest derivatives holding? Isn't that Chase? I think Chase has the multinational stuff.
Yeah, and I think that's, yeah. I mean, I think Chase is the strongest, though. Citigroup has a history of screwing up. I mean, it would not be outside of their level of expertise to screw up real badly.
It's a good trading stock, though. I can tell you, I like trading those options.
Yeah.
But just the thesis here is that I see the potential of a really significant breakout from where we are now, and that makes it very challenging with the history. Because when I find a topic, just like the Bitcoin halving, I go in and I dig into it, and I look at it, and I read my 20 sources, sometimes 30, get a feel from where I'm at. I want to get a PhD view of it, and then look at both sides of the camp and decide where I think we might be going. And so the question really becomes, and I'm going to go back down to the weekly chart, because I think the Magnificent Seven, is not going to change. Reason is we've been in this same MO where all the big money is chasing the Magnificent Seven. They're rotating in and out. That rotation has not stopped since the lows.
Do you have a tool for cutting out part of the chart and then overlaying it somewhere else? If you cut out from the bottom in 2020 to the top in 2021, so almost 2-year period.
Like the only thing I can do.
And then overlay it from the bottom in 2022.
It probably is something similar to that. I don't know how to do that.
Well, so my point is that if the current rally lasts roughly 2 years, like the COVID rally did, we're only halfway through.
Yeah, right. So my point where I was trying to get is that November 2021, 391.20. I think that's our line.
And what if, just let me Elliott wave my way through this. What if from the bottom of 2020 to the top in 20, go ahead and show a little bit bigger chart. From the bottom in 2020 to the top in 2021 was wave 1, and then that big correction was wave 2, and we're now in wave 3, looking for a little pullback, and then a big extended wave 5.
Yeah, the way it's measuring it now, it's actually a super cycle, and right now it's seeing it as an ABC. But this is just topics on crossroads. Crossroads are typically B's or our second wave. And
I think the new super cycle started in April, or March 26th, actually, of 2020. I think that was the beginning of the new super cycle. I think everything prior to COVID is its own thing. And I think that starting on March 26th is when we started a new super cycle.
Yeah, actually,
all the other stuff is gone.
Yeah, that would have been the grand super cycle, because that's bigger than this. Okay, we have the primary wave, cycle wave, super cycle wave. So it would have been a grand super cycle wave, which, I feel privileged to be able to trade that.
Well, what it means is that
we got a lot of upside if that's the case.
Right. And so here's the way I look at things in general. We live in the best economy in the world during a period where billions more people will get out of poverty, during a technological transition that's going to lead into an energy transition. And it's going to take a generation for that all to play out, but it's going to be led by technology leading into clean energy. And those two things over the next 15 years, right? A generation is 15 to 20 years. Over the next 15 to 20 years, that all plays out. So that means that the things that they displace, that they disrupt, will tend to be secularly bearish with cyclical bull markets. And the thing, and technology and clean energy will tend to be secularly bullish with some cyclical bear markets. You guys get the difference? One is long-term up with little pullbacks, and the other one is long-term down with little rallies. Which side do you want to be on?
You want to be on the right side.
Or the winning side, yeah. You want to be on the side of the big trends and use the dips as buying opportunities.
Yeah.
And you want to use the rips on oil and consumer staple stocks and other things that are tied to scarcity. You want to sell those rallies. So like copper is going to get a huge rally sometime this decade, and you'll want to sell it because we know, and that satellite is like there right now or on it's really close. I mean, it might have gotten there. I thought it was getting there in March actually. But the second satellite to explore how capable, how we're going to mine asteroids, because it's going to happen. How can we do that?
Question is, do we do it in our lifetime? The mining, it'll come. I don't know.
It'll be yeah. I mean, if we don't die young, yeah, it'll happen.
Getting there and then mining it is one thing, and then moving it. I mean, we really need. I read up on that a bit in ways back, but we really need a significant technological advancement.
The big trick isn't getting there or mining it or getting it back to above the planet. The hardest part is getting it from orbit down to the planet. That last piece. Getting it from however many miles up that is.
How true is that? It's that way with everything, isn't it?
Well, yeah, that last piece is going to be the hard part. How do you drop it down to the planet? And the answer is going to be in small batches. Okay, and cool. I don't know how they make that affordable. That's the bridge. They'll figure it out technologically first, and then they'll say, okay, we know how to do it in theory. We even know how to manufacture it, but now how do we make it make sense economically?
Okay, let me jump back to this because I have a 12 or 1:15 your time something. So, all right, looking at the Dow here. So, again, breadth is expanding in the Russells, but it's really sort of stalled in the Dow. So I think our outcome to the upside is going to be relative on whether or not this primary wave 4 is deep or shallow. Right now, the count sees it as deep, but if it's shallow, then we are going to just break out here like we did here.
Did I tell you that I saw U2 and Lady Gaga sing Shallow at the Sphere? I think that's an omen.
Yeah. Oh, Lord have mercy. Okay, let's look at the Russells here. So, the Russells, the count.
Still my favorite family.
Say that again.
Still my favorite family.
Yeah. And, this, we could be on the verge of a breakout here. There's no reason this can't flip. This is a true crossroads, like I discussed. And my main point is this too, right? If it morphs, it would go into something like this and it would become an impulse up. So that 2 is always a crossroad and that B is a crossroad. And then both landing at our top here, I don't know the percentage because I've really never tracked those, from an outcome standpoint. But I know it's there. So, but we could get really bullish. I'm going to come out with
this current setup that you put there with the shallow pullback leading to a impulse up. I like that chart too.
Yeah. Okay. I'll do that. You like some of my charts, huh?
I like most of your charts. I don't understand all of them, but
That's all right. Well, hey, you ever need an explanation, just zing me. I'll be glad to do that. All right. So the larger picture again. I'm going to go out to the 3-month. So, here again, back to that MO, that's a pretty bullish looking chart when I come out to a 3-month chart.
Well, and Tom Lee is saying years and years of outperformance for small caps.
Yeah, I can see it. Yeah. 203 to 320, the slope here, if you look at the slope here, we adopt this channel, like those of you who've been watching my work for a while, I like to steal things. So, that's pretty aggressive slope.
Yeah, find the giant and stand on his shoulders.
Yeah, that's exactly. And we've got a history of that in the tape. Yep. Plus,
Yeah, well, if you go back to 2000, it looks like that.
Yeah, Yeah, exactly.
Just so I'm just going to throw this out there for you, folks. If you're an optimist, take the bullish side whenever you can because you'll be happy. If you're a pessimist, go ahead and bet the bearish side, and you'll get to stay a pessimist because you'll lose money.
All right, let's take a
How do you
look.
like them apples?
Yeah, hey, that works. Outside my pay grade. So, this is leg one. So, we've got this mound one on TLT, right? So we're going to get another mound over here, something like this, right? And the challenging part here is count keeps flipping back and forth here. I never liked it. Done this for 3 weeks now. Get a bearish count, get a bullish count. Get a bearish count, get a bullish count. So, and I want to incorporate that into what I see in the other charts, aka SOX, aka, the SPY, the NASDAQ, and the Russells. And I see that upside. And I'm like, what happens if the Fed doesn't tighten and they flip and it goes back, and then it builds on my case for, hey, maybe we have an event coming that we haven't seen yet that's going to cause the Fed to flood the markets. So, and just a tidbit out there, folks, you guys hear anything that's relative to that? Shoot me a message or shoot Kirk a message. Let us know what you saw, because, four eyes are better than two.
Yeah, I think that what's going on between the United States and China right now with their bilateral negotiations is under the radar because everybody hates to think about China, but it's incredibly important. In my mind, is the most important thing out there because they are negotiating two things. They're negotiating why China shouldn't invade Taiwan.
Yeah.
And China doesn't really want to invade Taiwan. They just are using it as leverage to get what they want economically. And what they want economically is, God damn it, don't let our economy collapse, because then we all get kicked out of power. And there's a revolution and a war, and who knows what bad things could come out of that. So while we don't want the communists in power, we don't want a war either. So if the communists stay in power because the Chinese people don't overthrow them, who are we to bother to get involved? So we want to make sure that their economy does stay rather robust, because the last thing you want, as I have said over and over again, is a billion cold, hungry, angry Chinese people. Pretty logical, right?
Yeah.
World peace kind of comes into it. So if they have to print money or loosen conditions or collaborate and conspire to make things go up, they're going to do it.
Yeah.
You know how I know? Because that's what always has happened.
Yeah. I mean, in many ways, this disruption from COVID really has identified some of our structural weaknesses, let's say, in our supply chain. And I don't think it's a good time with the level of national debt for that to deteriorate further. I think we need China for cheap manufacturing, but at the same time, we need to stop seeing the toxins in the materials that I think it's more important than anything. So, and the challenging part is, how do we force them and still give them what they need to, clean up the act a little bit, I think is the approach. But I think it does occur, but I don't know how long or the timeline.
I think going forward, we see China sell a lot more into Europe.
Yeah.
And about the same amount here. I think Mexico fills the gap for here.
Yeah.
And Farley over at Ford, CEO of Ford, talked about it this week. And, Fine over at the UAW got mad at him for it. But the reality is that the UAW got treated like the car industry got treated like, hey, you're UAW, you're all the same. And Ford had thought it had built up some goodwill over the years because they had done things. They had been the leader in labor negotiations. And the UAW said, nah, you're just all the same. Give us a raise. So it's interesting to me that Fine didn't choose to bring the pension back, because he could have. The thing is that it would have been a UAW pension that they ran with a contribution from the car companies versus the car companies running it. Why is that important? It's because who has the liability then, right? The union doesn't want the liability of a pension. So how can they tell the car company to have the liability of a pension, right? So that's why the pension thing never got negotiated, even though the UAW stomped their feet and thumped their chest about it. And I'm not against those raises. I'm okay with those raises. You all know that. However, from Ford's standpoint, they got lumped in as a group. So now what does that make them do? That makes them have to act more like the group, which means build more stuff in Mexico. So if the China-US negotiations mean that China gets more of the global market and the US gets more of this hemisphere, who's the big winner? Mexico is the big winner. And I tell you what, folks, if you take a look at their market in the last year, I think Mexico probably got a breakout coming too. What is the symbol for Mexico? Is it EWM? I don't remember what the anybody in the chat can put that up. That's Malaysia.
That's Malaysia.
Anyway, what's the what? I've got all the EWs in my head and I forget which one is Mexico. Come on, somebody do some work. I don't know. EWW says less. No, it's the upside down M.
Yeah,
Upside down M. Thank you, Les.
EW.
That's a heck of a rally.
Yeah.
What does it look like over the last 5 to 10 years? Right. This is just the start. Yeah, but see, you had a huge decline. So it's not even broken out. It's just flirting with all-time highs, right?
Yeah, it's still in its range.
So I think Mexico is a buy the pullbacks.
Yeah, actually, right now it's not giving us one, according to this. Actually, I haven't looked at this in a while. Breakout's going to occur at 76.80.
Yeah, this is probably a chart we should pay more attention to because this is going to be a U.S. shadow. It's going to be an echo of the United States.
Yeah. Challenging part is that cycle wave up there, which is going to come in at 74.
Yeah.
And
their corrections being an emerging market are going to be bigger.
Yeah. But that would also coincide with March, though. That's, if we have that drawdown, it really depends on how we handle that drawdown in March. When we get back down to that $62. So, to me, I get real excited as a next entry long at that 62.
Right. So that the ETF that I'm using for Latin America, ILF, has a pretty substantial Mexico holding. So I generally like South America from here and Mexico as a group. That's why I don't just have a Brazil fund or something. I think the ILF is pretty, again, if you could overlay ILF and Brazil here, I mean, they'd all look pretty similar. You get more juice, I think, picking out the individual countries. Again, I'm managing other people's money, so I use ILF to get that diversification. But it's a really good basket, at least for the foreseeable future.
ILF, you said?
Yeah. Wow, even more volatile because of the South America component. But they're pretty similar, right? I mean, they're similar, but ILF actually has more volatility.
Yep.
Interesting.
Yeah, actually a lot more.
Yeah.
Yeah. I can throw the fibs up, just giving you a fib overlay on that.
Oh yeah, let's go Fibby.
Yeah. Oh. I mean, so that's how much we're talking. 3 standard deviations is there on both sides, and look at how much more volatility is there.
Yeah.
So,
So I better buy right.
Yeah. It's a little more challenging to follow. So, but that's what I got, bro.
Good dips. Yeah. All right, folks. Thank you very much. Have a great weekend. And this was actually a little shorter than last week, so editing will be easier. I'll get that done today. I have poker tonight, so I'll be doing my editing tonight while I play poker. And in the meantime, I've been threatening to go all Alexander Hamilton on you, just right out of my mind. And so I have 115 articles started. I'm going to start dropping those.
My goodness. You've been eating
115 ideas. Now, it goes back 2 to 3 years.
It
goes all the way back to COVID. But
maybe I'll go on my vacation now.
I'm going to, between now and the World Series of Poker, which right now I'm on pace to win 3 different seats in the tournaments, I'm going to try to get all 115 of those articles written. And in particular, I'm just writing strategy pieces. So semiconductor strategy, technology strategy, energy strategy. So I'm going to do that so that people, whether you're a stock investor or an ETF investor or both, you can figure, okay, well, I just want the stocks. I just want the ETFs. No, I want to do the whole thing. And I think that'll make it easier. I think that semiconductors, which we looked at earlier in this presentation, are huge over the next 5 to 10 years as we build out AI, and Bitcoin continues to be a big deal, and EVs, which have a lot more semiconductors. Semiconductor demand is still rising. The growth rates are still accelerating, which is crazy to think about that.
Yeah.
But semiconductors, there's nine semiconductor companies that really could have been on the grandpa stocks list. I just didn't want to have 9 semiconductor stocks, and I talked about that in the grandpa stocks because they're that good, and their businesses are that good that they could actually be grandpa stocks. they've in the past traded more cyclically, but now they're just in a secular growth model. And I mean, they lead the market almost in any upcycle. So I think that semiconductors as a group has to be part of your strategy. I'm mostly just going to use SOXX, the ETF, and Intel, because I think that they're in a unique position to take market share from Taiwan Semiconductor. The rest of them, they're hard to figure out. I mean, do I love Nvidia? Yeah, I love Nvidia. I bought that, when it was still double digits. And the problem with Nvidia is I do think they're going to have competition. Are they a leader? Sure. Are they going to get competition in the next 3-4 years? Yes. So do I think they're going to keep going up exponentially like they did in the last couple of years? No. So do I just buy them in the basket? Yes. Right. I mean, that's how I'm thinking about it, is unless there's a unique opportunity that I can recognize and I'm smart enough to figure out, and preferably has to do with them getting government money, I'll probably just buy the ETF and Intel. Those are probably the two that I'm going to buy.
I like it back at 600.
Stocks? Oh, Nvidia.
Yeah.
Yeah, I mean, if I could get a great big pullback on Nvidia, then I'd have to say, well, I could at least own it for a few quarters, right?
Yeah.
So, we'll see. I just tell you, semiconductors have been a great investment for a long time, and if you haven't wrapped your head around that and come to accept that, hey, this is probably something that's going to keep going, right? Because technology is just not going to go backwards. And everything requires more semiconductors until we actually have real quantum computers, which, according to CES 2020, might not be in our lifetime, because overcoming the difficulty of,
I think they outlaw them.
Well, but the thing with quantum is that you got to take something that's random and make it controllable. And how do you control random? I mean, it's not just hurting cats; it's hurting cats that can fly. It's because the way the light works. And I don't know if they're ever going to completely figure out. I mean, I think you're going to see major advances. Computers are going to be 100 times more powerful in 10 years, but I don't think we ever get true quantum computing, which is what it would take probably for AI to start living. Whoa. Right? We're not going to get a living AI unless there's quantum computing. And you might be right, because I think people know that, and maybe they do ban outright quantum computing because they know that is the thing that could make AI sentient, which can make it not like us.
Yeah. Well, our problem is we ban it, and
then Russia puts it on a satellite in space with a nuke.
I can't. Like Kim Jong-un, I don't think he's going to ban it. I mean, just with just all the hacks they've been doing now.
He'll eventually die of an unfortunate heart attack.
Yeah, but he's got 17 kids? I mean, you gotta remember, he's a 4th generation over there, I think.
Yeah.
But
hey, folks, interesting stories with that family. If you ever get a chance to see some of the documentaries about the North Korean royal family, he killed one of his brothers, and it's wow. It is Shakespeare all over again, but in North Korea.
Yeah.
So all right, everybody, have a great day. Thank you very, very much, Shooter.
Remember, like and share if you enjoy our work, and please send other people our way if you guys get an opportunity to do so. Sunday, we're going to have a quick getting started with primary waves at 6 p.m. Central Standard Time. It's free. Everybody can join us. So love to see you there.
Yeah, and it'll end up on YouTube.
Okay, perfect.
All right. Thank you very much. Enjoy your 36-degree weather.
I'm going to, actually.
All right. Have at it.